All right. Welcome back, everyone, to the Real Estate Standard Podcast, episode 18, where commercial real estate and Bitcoin collide. I'm your host, Tim Kotzman. I'm here with Kenny Alves and Chris Drizga. And each episode here, we break down how serious operators, investors, and developers stay competitive and profitable in the 21st century by examining commercial real estate through the lens of Bitcoin. On today's episode, we're joined by Leon Wankum, a commercial real estate developer and author of Digital Real Estate. First, I'll throw it over to Kenny for an update on Westmain Storage stacking.
Thanks, Tim. As of today, May 4th, we hold 4.44 Bitcoin. So that's 444 million Satoshis. And here we got the Westmain dashboard up. So far in 2026, we've stacked just over 2 Bitcoin, 2.26. And year to date, our Bitcoin yield is 103%. What does that mean? That means we doubled our Bitcoin stack since January. Our Bitcoin per square foot is at 6,405 Satoshis per square foot. We keep climbing. There's approximately 97 billion square feet of US commercial real estate. So if you divide that by all 21 million Bitcoin, you get about 21,000 sats per square foot. So we're working towards that number. Our Bitcoin holdings now cover just over 15 months of mortgage payments. And some more exciting news, we received our third digital rent payment from Strategy the other day on the 1st of the month, $1,960. That's going to increase our NOI, our net operating income, by about $23,000 a year through digital rent payments. And that's the equivalent of about 6-7 10 by 10 storage units. So we're building in cyberspace, adding a new form of rent. And what do you think, Chris?
The additional 10 by 10 units is music to Leon's ears, I would imagine, being a developer and always trying to figure out how to not only maximize square footage, but be efficient as well. So I was thinking we need to do, maybe a quarterly review or a semi-annual review here, Kenny, of the Westmain performance, because as you're running through these stats, the sats per square foot, the mortgage coverage, BTC yield, I'm just kind of thinking back to when we started this, and almost every one of those metrics, if not all of them, have doubled, if not more. So I think just being able to do an episode to step back and just kind of, review where we've come in such a short amount of time is going to just, kind of further validate that the thesis is working. So I'm incredibly excited about all of that, and it should be good. So Leon, welcome. Thanks for joining us, man. I know it's been a long time no see here, all the way from last week. Really excited to have you join us here today, because you bring a really interesting vantage point to this whole industry, this entire discussion. And you were actually one of the first people that I found online that was talking about the intersection of real estate and Bitcoin, commercial real estate and Bitcoin, and you really helped me kind of shape a lot of my own thoughts and opinions, and a lot of the strategies that we talk about here on the pod. So I'm very thankful for you just being a thought leader in the space in your own right.
No, thank you. I appreciate you saying that, and also Tim and Kenny. It's a pleasure to be here with you guys. I'm pretty happy to see where this is going, that we have a podcast now that focuses on Bitcoin and real estate, because I think it's an interesting intersection. It's the biggest asset class in the world and the fastest asset class in the world, and both sort of hover around the idea of being a pristine store of value and pristine collateral. So I think there's a great fit here and a lot of opportunities. And Chris, just maybe introducing myself for those who don't know who I am. So I learned about Bitcoin like over a decade ago, I guess. I was studying philosophy at the time. and I was really interested in the Austrian school of thought. So I learned about Mises and Hayek and then Menger. And as I did that, some of the guys that introduced me to these thinkers and economists, they also told me about Bitcoin and the emergence of markets, black markets also, that hover around Bitcoin or that exist with Bitcoin. And then in 2015, I studied financial economics. I did my master's degree, and I decided to dive deeper into what Bitcoin is, not just the network, but also the asset, Bitcoin. And it's also, I think we can talk a little bit more about the difference between the network and the asset, because there is a difference. And I think it's interesting to look at the asset by itself. And that's what I did at the time. So I wrote my master thesis in financial economics around about Bitcoin. And then I joined a family business, which is real estate. And I've been in the real estate business since I can remember, really, even as a young adolescent and as a teen. I was working on building sites, cleaning out garages and doing things like that. In 2016, we founded a new company called Baufeld. In northern Germany, we construct real estate in Hamburg and adjacent cities, and we constructed around 100,000 square meters in the past 10 years. And I was stacking Bitcoin on the side. I was just a Bitcoiner who was interested in the Austrian School of Economics and in cryptography and also counter economics. And then what really changed me was I had a year in 2020, just before COVID, where I actually left the real estate business. And I moved to a different city, and I wanted to stop being involved in real estate. And then Michael Saylor bursted onto the scene, and he started talking about Bitcoin as digital property. He compared it with buying properties in Manhattan, and he talked about it also as collateral. And that made me think, you know what, actually, I could combine the two. So my love for Bitcoin and then my practical experience in real estate actually proved to be a good combination. So I started to integrate Bitcoin into the operations of our business. I joined the business again, and we started converting rental income into Bitcoin. We started to take some of the profits we made from selling real estate to buy Bitcoin. As we refinanced properties, we started to buy Bitcoin. And at the moment, there are different things that we're working on. Most interesting for me is the dual collateralization of Bitcoin and real estate, and the aspect of mining, also integrating Bitcoin mining into the energy system of a property. And also, Tim, as you said, I can call myself an author now. I just finished my book, Digital Real Estate, which is available through Bitcoin Magazine. It's going to be shipped in mid-September, but the book is already available for pre-order. And the book really dives into how Bitcoin is changing real estate development and real estate investing.
Yeah, I was happy to meet you in Las Vegas, Leon, because I think you and I have very similar backgrounds, second-gen real estate developers, and having an understanding of Bitcoin. And there's not many people that you can talk to about that. First, Bitcoin is a very small industry at this point, and the overlap between real estate professionals and Bitcoiners is a needle in the haystack, trying to find somebody that can speak the same language. So it was very refreshing. Chris had put on a mastermind group. I don't know if you want to talk about that and the stuff that we kind of discussed during that side meeting in Vegas, but it was probably my favorite part of the trip. There was connecting with all the like-minded real estate professionals that have a Bitcoin first understanding. So just wanted to say that. But Chris, I don't know if you want to talk about that side event that you put on, because I thought it was excellent. It was great food. We had some Greek food, and it was a great time.
Yeah, absolutely. I'm glad everybody was able to make it. We basically hosted a side event, Bitcoin conference week in Vegas, and what we've been doing here the last 6 months or so. We're able to not only get the word out, but there's a lot more real estate Bitcoiners out there than you would maybe assume. So we, whether it's myself or Kenny or even Tim have been able to start building out this Rolodex of like-minded professionals across the country, or in Leon's case, on the other side of the pond, that everybody's coming from a different vantage point. They have, commercial real estate expertise. Maybe they're on the lending side, maybe they're on the brokerage side, maybe they're an acquisition guy. a developer, what have you. And we were all having the same questions, having the same conversations, but there was no way for everybody to really, meet and, further these conversations and develop these relationships. So that's what we did, was just fill that void and got everybody into the same room to kick off the first annual. So I thought it was a great time, and there was a lot of alpha that came out of it. A couple guys got to pitch and share some ideas on what they've been working on. I know Westmain got some good feedback. There was a couple other business ideas that were floated, and I think everybody got some good, some good takeaways on what they're doing. They were able to ask questions and get feedback, not only from a Bitcoin perspective, but from a commercial real estate perspective as well. So, and Leon, I wanted to, I love the background there. I wanted to maybe, you hit on a couple different things that we've hammered on this pod in the past, whether it's allocating some of your free cash flow to Bitcoin, rethinking the capital stack and integrating it to the financing, some Bitcoin mining in there, I think you maybe alluded to as well. There's a lot to unpack there. So I maybe like to hear, let you start with, one of those areas, and just, I'd love to hear how you and your partners thought through that process, right? I think one of the biggest questions Kenny and I get from other real estate owners on the treasury strategy in particular is, how the heck do I arrive at an allocation, right? Is it 10%? Is it 50? Anywhere in between. And we've obviously had that conversation, but I think it'd be really helpful for, the audience to hear how you and your team thought through that. What was the conversation like behind closed doors?
Sure. First of all, I really enjoyed the meetup as well. So I just want to say that was good. Keep it going. I think we should do it maybe once a year or so, maybe around the Bitcoin conference. We have a regular real estate and Bitcoin meetup. I think that'd be great. And to be honest with you, when I started to think about it, I actually initially in 2020, before I also decided to integrate Bitcoin into the existing business, I actually kind of came to the conclusion investing into real estate doesn't make sense anymore because now Bitcoin exists. Because what I did is, over, like I said, a 5-year time frame, I bought Bitcoin and I got involved with real estate, and I realized that the operations in real estate and the business aspect of it is just so intense that saving in Bitcoin is superior to investing in real estate. That is not wrong. That assessment is not wrong. But then I came to the conclusion the leverage that exists within real estate and the scale of the business and the tax advantages, those do not exist around Bitcoin yet. Sure, and we can talk about how to integrate Bitcoin also as collateral into both real estate development and also real estate investing. But at the end of the day, I think the decision I made is I looked at real estate differently. I don't look at real estate anymore as a savings vehicle or as like a savings account, which I actually did before I really got into Bitcoin. I look at real estate now as a business, a plain business. So it doesn't matter if you run a real estate business or if you run an entertainment business or if you run a restaurant. At the end of the day, it's an operational business. And then I looked, how can Bitcoin support us in our business? And starting with the operations, I think it's quite clear that the income that real estate yields needs to be protected from inflation. So the first thing we did was we thought about, could we ask our tenants to pay in Bitcoin? Actually, that is not that easy because of some regulatory hurdles, but that is an opportunity. And I know in the US, it's a little bit easier. So tenants can pay in Bitcoin. Number two, you can just convert rental income into Bitcoin. And then the question is how much? So I always think it should be as much as possible, but it should not endanger the day-to-day operations. So free cash flow, everything you don't need to put to the side to pay for interest rates or for maintenance reserves. So maybe 20 to 30%, something like that. 30 is more on the aggressive side, and 10 to 20% is more on the loose side, I guess. And then the third thing that I just talked about is mining. So in Germany, for example, I'm going to talk about the German market now, but this also applies to some regulatory jurisdictions within the US. We need to include solar at the moment into new developments. And first of all, that doesn't really make sense because only 15% of the year there's solar power. And also when there is sun, we can't even sell the electricity. So what you can do, you can use actually Bitcoin mining to take the surplus energy and basically create another income stream and a few more sets that you add to the rental income. So I think that is a good way to integrate Bitcoin into the existing operations, because let's say you run a successful real estate development company, and the size actually doesn't matter. It doesn't matter if you have 10 apartments or if you have 100 apartments. You usually did it with a loan, right? So you need to pay back the debt. And real estate is a long duration asset. So if you want to stay within the business of real estate, you kind of need to think long term. And Bitcoin fits great into that, because there's no point in holding Bitcoin short term due to the halving cycles of Bitcoin. It doesn't really matter if we're going to go into a super cycle or not. I personally don't believe so. I mean, I've seen the price of Bitcoin now since like almost 15 years, and I've seen Mt. Gox and all the other stuff. And I do believe max pain is always the way that Bitcoin is going to take us, because that is the market, right? And we can't really control the market. That is actually kind of a fiat narrative that people sometimes project onto Bitcoin. But I do believe max pain, whatever that needs, is what needs to happen in Bitcoin in order to build the resilience the network needs. And without the resilience in the network, the asset actually is not that interesting, because the security of the Bitcoin network is what builds trust and makes people put their money into Bitcoin. So the resilience and the security of Bitcoin are sort of the foundation for the asset Bitcoin to appreciate in price long term. So, and then we kind of looked at our existing real estate portfolio and we said, what can we sell tax-free? So in Germany, for example, you can sell real estate that you've been holding for 10 years tax-free. And now in the US, you can do things like a 1031, and sometimes also the refi is tax-free. I'll talk about the refi in a second. But after the operational layer has been sort of made better with the use of Bitcoin, we looked into our existing portfolio and said, we are not a real estate company, we're actually a digital real estate company, meaning we're interested in two long duration assets. Number one, it's real estate. Why? Because that's our expertise. We are developers. We can raise capital. Then we can build and receive equity for the service of building. So even without bringing capital to the table, we can receive equity, right? And that then allows us to leverage that portfolio into Bitcoin. We're going to stay within the world of real estate development, but we're going to add digital real estate to the business line. We're going to add Bitcoin. So whenever we have not just free cash flow, but whenever we have profits, we sit down and we talk, what are we going to do with these profits? And then decision is usually made to buy more Bitcoin instead of developing new real estate, because at this point in time, the scale of our business after 10 years is big enough for the existing operations to fund themselves, and any profit that comes out of the operations, we put into Bitcoin. So we almost, the way that I look at it is we created our own Bitcoin mine. We don't mine Bitcoin, but we mine yield and cash flow and profits with our expertise in real estate development, and that we put into Bitcoin, which is an asset that we are willing to hold forever. Like real estate, I'm willing to hold for 20, 30 years, but I could maybe in 30 years change my mind. With Bitcoin, I'm going to keep it. I'm going to give it to my children. Hopefully, they're going to give it to their grandchildren. So Bitcoin is even a longer duration asset than Bitcoin. And the time frame I think that you need for Bitcoin is a little bit longer even than real estate. And once you start also taking operational profits and put it into Bitcoin, then obviously the Bitcoin stack grows. And suddenly it's not 1 or 2 or 3%, but after a bull market or two, it becomes 20, 30, 40% of your whole company. And then I think you really start to think, what should I do with the Bitcoin? Should I just keep it? Should I maybe collateralize the Bitcoin and do also what Strategy is doing? Because what Strategy is doing, of course, is also other companies like MetaPlanet, who are specifically interesting because they have a real estate background. They have understood that Bitcoin is superior capital and superior collateral. So a collateral cycle, which I call like what we do when we refinance real estate, might take from building real estate to owning it, renting it out, then waiting a few years till the price goes up, refinancing it. That can take 5 to 7 years. In a bull market, MetaPlanet can basically collateralize their Bitcoin within a day, issue some moving strike warrants, issue some equity, buy Bitcoin. Within 3 days, they have increased their stack. So Bitcoin works really well as collateral. And then once you collateralize your Bitcoin, you can decide what I'm going to do with the money that I receive. Am I going to buy more Bitcoin? Or maybe you are in a time frame that we also experienced where interest rates go up on real estate and banks are a little bit reluctant to lend. but maybe you need some money to fund the operations. So Bitcoin as collateral is a great opportunity to be able to have access to loans that are quickly executable. So within a few minutes, you can log in, you collateralize your Bitcoin, you take the money, then you fund the operations, or you just buy more Bitcoin. So without being a publicly listed company, what you can actually do in a private manner, you can copy what Strategy has done and has been doing, and you collateralize the Bitcoin, you keep buying more Bitcoin. So then the business gets a bit more complex, of course, because over time, the Bitcoin stack grows. And then I think where we are at the moment, and which I personally find very interesting, is why don't we collateralize any real estate loan with Bitcoin? So we are working on it at the moment, but it's difficult. And the idea is, let's say we need a real estate loan worth 10 million euro or dollars. What we're going to try is we're going to find a bank that's going to give us $1 million or 2 million on top, buy Bitcoin with that, immediately hold it in a treasury. And as you construct the property over the 4 or 5 year time frame, the risk goes down significantly because Bitcoin goes up in purchasing power over that time frame. So even if the construction gets a little bit more expensive, you can lend against your Bitcoin, fund the operations, the development. Or if that doesn't happen, you still take out some risk because there's lots of risk in a construction phase. And once the building is finished after 5 years, you don't have to wait until the market prices the property higher than the building price. You actually have a Bitcoin treasury that you can already lend against. So also the refi becomes quicker. And then the engine that you build is pretty interesting to help scale the business development as well. But which is, I think, very interesting is that you don't need to stress yourself and become less dependent on interest rate, because I'm interested how you guys look at it, but I'm personally used to be extremely stressed about interest rates. Like Bitcoin, real estate is actually a business where you arbitrage interest rates. If interest rates are low and you can build fairly cheaply, you make money. If interest rates are high and you can't build for cheaper than the loan you receive, you don't make any money. So the arbitrage is usually around interest rates. And as interest rates have come up since November 2021, having Bitcoin and having a Bitcoin treasury has really made our life easier and our sleep better.
Lots to unpack there, Leon. I'm excited to get into it. I'll let Chris go ahead.
That was fantastic, and definitely a lot to unpack there. But I think what you ended on was probably a good starting point here. I mean, the interest rate dilemma, I call it, is exactly that. You take a long duration asset and you now have all the market participants that are thinking short term because they're so worried about the interest rate risk and the refinancing risk. That's a major problem. And it has second and third order effects. The other example that Kenny and I have talked about here, kind of in that same vein, is that if you're raising a new fund and you're tasked with deploying that capital, there's a misaligned incentive component here, where the people that are charged with placing that capital, their compensation is tied to their ability to place that capital in a finite period of time. And if they don't do it, then they're losing it, basically. So you can very easily see the scenario where those guys or gals are going to be acquiring assets that maybe they wouldn't otherwise have, right? And then you put that on top of your comments on just the free market component of nature of Bitcoin and being able to flush out the malinvestment and experience max pain from time to time. I want the real estate community not to sleep on that comment, because it's so incredibly important. And we haven't really had that since 2008, right? I mean, you could say, yes, there was a lot of distress and disruption during that time period. And there was. I don't want to downplay that. But to say that the malinvestment was fully flushed out of the real estate market is just, disingenuous. That did not happen at all. The majority of it was just papered over, and we kept on building on top of this foundation of sand, essentially. So you now see these. You see the troubles that we're experiencing in today's market, and it's just exacerbated by the fact that you have malinvestment from 5, 10, 15, 20 years ago now at this point. So I don't know necessarily how to maybe wrap up that comment there, but you are exactly correct, Leon, and those are incredibly important pieces that I think the broader real estate community is just really overlooking. And I think that is a big part. Their opinions on Bitcoin aside, if you bring it back to their core business, their expertise, that is real estate, that's the elephant in the room.
Yeah, and I also think like with real estate, there's productive capacity in real estate. So if we talk about just like you have $1, where do you want to put it? I would always put it into Bitcoin. And also with the example of MetaPlanet, you can see a purely investment-focused company that is focusing on Bitcoin, in this case MetaPlanet, is going to outperform any company that focuses on Bitcoin. That focuses slowly on real estate. But if you look at the productive capacity of real estate, whether it's storage facilities or it's shelter or entertainment space, like that productive capacity will stay even on a Bitcoin standard. Let's say all the monetary premium, all the money that sits in real estate, because it's a substitute for money, because fiat money is bad money, so people need to invest, and they invest in real estate because it's relatively scarce. Even if that monetary premium moves out of real estate, there's still productive capacity. So we are trying to center our business around the productive capacity of Bitcoin and use Bitcoin really as that monetary performance booster that will allow us to then get a good return over time.
So before we go too much further, I wanted to jump back to what you said about refinancing, because I think that is where a lot of the real estate folks are going to really resonate, because you're right. Timing of that is very important with real estate. You have this happens about once a decade, twice if you're lucky, I say, right? And what we're seeing here with Westmain, we've been talking to about a half dozen banks trying to get the best refinance deal as possible. And typically the interest rate is very important. But what we've found, and this may be different in the US for you and Germany, with by adding digital digital credit, which has been kind of just a newer type of asset class just in the last 12 months. Adding that with Bitcoin has major tax benefits. It acts like a tax shield, and what it does is it allows you to refinance at a higher interest rate. So right now we have a fixed, just to use an example, we have a fixed interest rate at 3.66%. We didn't necessarily want to refinance early because we're, currently at 6% rates if we were to refinance. But the reason that we're willing to refinance over a year early is because when you layer in this digital credit, you're actually going to keep the same amount of cash flow because of the tax savings. You're going to have this tax shield. You're going to have, 38% is our tax rate for Westmain self-storage. So you have a 38% savings in the income that you generate. The excess goes into Bitcoin. And so you extract Bitcoin from the refinance without sacrificing cash flow, and you double your interest rate payment. So, to your point about how it's always very important to be aware of the current interest rates and what's going to happen. We have a new Fed chair coming in that's just getting appointed, and there's speculation whether the rates are going to go up or down. He's been viewed as a hawk, but he's said some contradictory things, so there's a lot of drama and nuance there. But to your point, when you add Bitcoin and now digital credit as well, you can actually refinance at any rate. Like the rate becomes more relevant as long as it's lower than what Bitcoin's CAGR or what digital credit is paying. And so it's a whole new world where you don't have to be as selective. And to your point, it compresses this long duration asset that you used to refinance once or twice a decade. It could become once or twice a week if you can get the flywheel to run smooth, like what MetaPlanet's been able to do as a hotel company. purchasing Bitcoin. And so I wanted to get your input on digital credit. Some look at it as a distraction, but I don't know if there's tax benefits in Germany, whether you can shield taxes and monetize the digital credit a little bit more and get like a bonus icing on the cake, if you will.
I don't know, actually. I have to look into it. I remember you saying that in Vegas, and it's like, I listened to it. I was like, oh, that's interesting. I don't know. I have to look into it. Like with digital credit in general, I mean, it's a brilliant idea what Saylor did. Stretch, especially, I think he's going to pull. I mean, he can pull hundreds of billions out of the market. I think people are not aware. I think people didn't grasp yet what he did. Like the flywheel that he set off, I think is going to, because the bigger this treasury gets, the more Bitcoin they can buy. So I think that most people haven't grasped yet what happened there. So I think it's brilliant, and I follow it with great interest. I personally would always, like, if you'll ask me about tax advantages, again, I'm talking about Europe here a lot. I know it's most of the listeners are from the US, but maybe it's just interesting also for you guys to hear, because Bitcoin is tax-free. If you hold Bitcoin for a year's time, in Germany specifically, it's tax-free. So you can then also lend against the tax-free, so you don't really need digital credit because of the regulations. But for other markets that are more highly regulated, it makes a lot of sense. And also the combination of digital credit and regular loans, where basically the digital credit can pay the interest rate and things like that. So there's a lot of opportunity. But I haven't been really looking into it because there's other tax advantages that sit around the asset class of real estate and also Bitcoin that are a little bit more favorable for us. But that is specific for Europe and for Germany also. But yeah, I hope that answers your question.
Yeah, I mean, it sounds like Germany has more favorable real estate law and tax law in general, because you're saying that if you hold Bitcoin for 4 years that you can sell it tax free,
1
or
year.
is that 1 year?
1 year.
So
Yeah,
even better.
I'm moving to Germany is what I'm doing. We're gonna.
And we have other problems here, but that is actually a great rule for a Bitcoiner. Yeah, if you're a Bitcoiner.
There you
I
go.
also want to circle back to the solar comment that you made too, because we have actually 2 solar arrays on Westmain Self Storage. One is used to offset our actual energy usage,
Yeah.
and the benefit of that like a lot of people are like, oh, they value the solar array on the the amount of energy and the dollars that it generates, but as you're aware, real estate's valued on cap rates. So when you reduce an operating expense and you're at a 5 cap, you're saving 20 times that expense. So if you have an expense that's $20,000 a year, well, if you remove that expense, you're actually increasing the value of the property by 400,000, or the business by 400,000. And so, we have two arrays, one which offsets the energy usage, and the second one is a feed-in tariff, where we sell it back to the electric grid at a premium. We're getting about 26 cents a kilowatt hour.
That's a
And
lot.
so when we look at it, it's kind of like flip-flopped. In Germany, you have like some, better things elsewhere. But like if we compared like if we were to mine Bitcoin with that energy, the Bitcoin network is only paying like single digit per kilowatt hour. Like you're getting like 3, 4, 5 cents a kilo. Like that's what you're earning in Bitcoin for the energy. So I'm kind of interested to see how that how you are able to leverage the solar in Germany. I know that one, it's a lot colder there, so the mining can help with the heat if you capture that heat and use that in the buildings. But it seems like there's different nuances depending where in the world you are, and solar can be better utilized if you put it directly into the Bitcoin network. Where we are, it's better if you sell it to the grid and then use that cash and turn it into and buy Bitcoin with the cash. So just kind of interested in digging in on the solar component of your real estate development.
Sure. This is generally speaking. So I think with solar, I think there's two ways to look at it. The way that I look at it. Number one is saving cost and using excess energy. So maybe we can start with saving cost because you talked about it. And I think it's a very important point. There are some companies, for example, 21 Energy and Riot out of Switzerland and Austria. What they provide a product that you can connect to your heating system in your house, basically. And they mine constantly. There's a little miner inside, and it creates heat, and that heat is being absorbed by water, and that water you can then feed into your house. So basically, what you're doing here, you're using the heat that Bitcoin mining generates to then save on operational costs. And usually you don't make money with it, but you have less operational costs. And that I think is very interesting because it makes the property more interesting, also long term if you want to sell it. And the other is creating excess energy or excess electricity. So solar just comes to mind, and wind farms come to mind because these are two technologies that are being pushed in Europe. And I think Texas with ERCOT, with their energy system and their grid, they have included Bitcoin mining because they have strong winds there and they have a lot of sun. Whenever the energy is not needed by ERCOT, Bitcoin can be mined, and Bitcoin miners are very responsive. You can turn it on and off. So when there's no excess energy, you just turn the miners off. So I think those are two ways that Bitcoin mining can be integrated into real estate. Number one, it's saving on operational costs. And number two is using excess energy to create an income stream. Once you create an income stream, you need to be, of course, also careful how you're going to be taxed. In some jurisdictions, that is considered a commercial activity, and that would mean you cannot sell real estate tax-free after 10 years. For Germany, for example, specifically. So you maybe need to create another company that provides that service to your company. So there's ways around it, but that's kind of how I think of it. Saving on cost and using excess energy to create an extra set denominated income stream. And if you think about it, mining is actually it is actually a real estate operation. It's at least the way I look at it, and it's a profitable operation if you have cheap energy, and it's also based about income, less about depreciation, of course. I mean, the appreciation that happens in real estate is an interesting factor. But I want to show you something. If I can share my screen, I want to share a page out of my book, if that works. Cool. I'm just going to find. I hope this is the right one. Let me know if you can see it. Can you see the page?
I think we're going to need Tim to share. Okay, here we go.
Okay, here you go, guys. So I just want to talk what this is. So this is a page of my book, Digital Real Estate. And what I'm showing here is what happens over a 30-year time frame if you add Bitcoin into real estate development, because I want to show that the appreciation in real estate is nice, but actually the appreciation in Bitcoin is much nicer. So what you see at the beginning here, you see there's a $10 million loan for real estate, and you add $1 million in Bitcoin. And what we see down here is at the beginning, the project starts in 2026. So in the first year, right, the real estate is worth 10 million and Bitcoin is worth $1 million. And as we move out into time, and what we used 21% compound annual growth rate over 30 years, because that's the average of the power law and that time frame. And over time, you can see that the appreciation of real estate, which we have in green down here, is almost not visible. And depreciation in Bitcoin clearly outperforms any appreciation in real estate. So after a 30-year time frame, the 10 million that were put into real estate at the beginning, they are worth around 51 million, but the 1 million put into Bitcoin is worth 302 million. So this really shows how you can use real estate to acquire Bitcoin, and that over time, the appreciation in real estate is actually not really comparable with Bitcoin, because real estate is relatively scarce and Bitcoin is absolutely scarce. And I think that really helps to understand how the productive capacity of real estate and the opportunity to generate income, the opportunity to create leverage, the scaling that you can have, and the tax advantages, those are what makes the business interesting. But the monetary component needs to be added by including Bitcoin into any real estate operation. And that doesn't just mean the operational layer of real estate. When I talk about real estate operations, I talk also about the financing that exists around the development process.
That was another interesting thing because I've spent a lot of time thinking about, in the US, we call, those construction loans bridge loans. And
Yeah.
you talked about how, at a certain point, once you have enough Bitcoin on your balance sheet and you have this dual collateral, now you have the real estate and you have the Bitcoin, and you want to go expand the real estate portfolio for whatever reason because it's grown, the Bitcoin component has grown to a larger percentage of your overall portfolio. You may want to start adding some more real estate to it. And what you can do is you can borrow at favorable terms, maybe not today necessarily, but in the future, I think we all agree that you're going to be able to get very attractive loans by borrowing against your Bitcoin because it's so liquid. And that if you default, it's so easy for the lender to take the Bitcoin compared to selling the real estate. And so what happens in that world is you borrow against the Bitcoin, you have the cash, you're out in the market going to do an acquisition and acquire a commercial piece of real estate, you become the best buyer, right? You become the best buyer because you're cash buyer, you don't have any financing contingency, and you can close quickly. And then after you close on the real estate and you do a value add, or if it's a development property and you go do the construction and then you stabilize the property and you lease it up, and you could even use the digital credit to help stabilize the property quicker, right? Just like you show here in your book that you can add $1 million of Bitcoin. You can also add $1 million of digital credit, increase the cash flows, increase the stabilization speed, and stabilize the rental faster. And it's going to, have enormous benefits here. So this is great that you've put this into a book to share with the world, even though, in different countries there's some nuances with taxes and laws. The overall picture is that real estate developers are transitioning, evolving, in my opinion. The ones that adopt Bitcoin, they're evolving from just a real estate operator to an asset manager. And there's now in my opinion, three primary asset classes for real estate operators. It's Bitcoin is the number one for me. Number two is digital real estate or digital credit, digital rents, and that's the products like Stretch, and then the foundational, where you're able to actually get this long duration credit, traditional finance, is the commercial real estate. So it's three-pronged. And then you can even take it another layer further, like we've talked about just now, solar. So when you add energy, Bitcoin, and then you can add AI, and you really have like 5 pillars for success. Like I think there's a lot of people out there talking about how building a stack, just like how Bitcoin has a stack of all these technologies that were created from decades of cryptography, all put together to make Bitcoin work with proof of work and the difficulty adjustment and all the components. Fong Li just gave a speech at the UTXO conference that we were at about how Stretch is also a mixture of things that gets the digital credit to be digital credit. And what we're doing with real estate right now is we're adding these 5 different technologies and putting it all under one roof. And I think that's really going to be the success story here going forward for commercial real estate. I don't see how traditional operators are going to be able to compete.
I think for the traditional operators, right? I mean, the one thing we kind of keep coming back to here is the fact that the real estate is the growth engine in all of this. It is the reason the flywheel is able to take place here in this asset class, right? Whether you're using the real estate to stack as much Bitcoin as possible, right? It's possible because of the real estate cash flows. Same goes for building up a stretch position. The same thing goes for the mining component. And all you're doing as you play this out 2, 3, 4 steps, like you're talking about, Kenny, is you're taking this single purpose, monolithic depreciating asset, and you're re-engineering it, repositioning it to be a multifaceted, resilient financial machine for the 21st century. I'm personally really excited about the mining components getting integrated into the mechanical systems, like you mentioned, Leon. I think there's tremendous opportunity there, and the way there's a lot of flexibility too, because obviously there's a location and jurisdictional component to it, and then there's also a property specific component to it, right? I mean, if you have like in your portfolio, couple thousand doors, right, of residential units, all those units have a hot water component to it, right? So there's a really interesting angle there where, I can go in as the owner, replace all those hot water heaters. I don't know what it's like in Germany, but there, you can depreciate 100% of that FF&E in the United States in the first year, and then on the back end, you're mining sats at the same time. So that's really exciting. And on the other hand, if you have a manufacturing or a distribution facility, your energy use is much different. It's much more robust. And maybe in that scenario, bringing in the solar panel and creating your own little microgrid that you guys are alluding to, is the right way to go about that. So I think there's a lot of optionality, and it's going to be really exciting to see how the market really takes to this, right? What strategies are applied and ultimately win out over the next, decade plus.
Totally. It's pretty exciting. And I don't know how like plain vanilla real estate developers want to survive, because there was very little, if you really think about it, because of the monetary role of real estate, there was very little competition, really. Interest rates since 2008 were fairly low, so prices kept rising. And now with Bitcoin, there's competition. Interest rates are, first of all, not that high, actually. If you look at the history of the world, the average interest rate was between 10, 15%, sometimes higher, sometimes a bit lower. But right now we're sitting between 3 and 7%, depending on the currency and depending on the loan. But it's actually not that high. And we are already in a sort of situation where real estate is not interesting anymore. So I think we had a century of a bull run almost. And that bull market is kind of over. It doesn't mean you can't make money in real estate. You can, especially if you do what, Kenny, you just described. If you add these different layers, if you add digital real estate, Bitcoin, digital credit, you have AI, you have the energy component, so you can cut down on operational costs, and then you still have the leverage factor and the tax advantages in real estate. So if you know how to kind of move with it, I think you can continue to be a successful real estate developer. But you kind of have to accept that there's a new player in town that is Bitcoin, and it's a superior monetary asset. It's absolutely scarce, it's fungible, it's divisible, it's mobile, it's great collateral, and you just have to kind of work with it.
Yeah, I think I see all the time on X where a lot of these like real estate Twitter guys, they complain if they get outbidded on a piece of property, and who's paying like a low cap rate. And I think it comes down to, well, what is the reason for acquiring this? If you're acquiring it for cash flow and you have a use for that cash flow, and for you, for you and I, the cash flow would be to buy Bitcoin in a lot of cases, right? That cash flow, if you think it's at a 21% CAGR year over year, is worth 21% more to you than it is to the guy on real estate Twitter that's like, oh, who's outbidding me? Well, the guy that's sweeping the cash flow into Bitcoin is outbidding you because he has a plan for the cash and not going to spend it on living expenses or disbursement to limited partners. They're going to keep reinvesting it into the company. Saylor has been talking about that. Why would you do a stock buyback? You're surrendering the cash back to the shareholders. They gave you the cash to go invest it, and you should never run out of deals. And Bitcoin and digital credit, in my opinion, is an endless deal flow. So the people that have endless deal flow that can make it an acquisition in any market condition, because you can buy Bitcoin at any price that it's trading at. If you're a long-term believer, if you think that over the course of 30 years, we're going to see double-digit CAGR over, 10, 20, 30 years, there's a huge advantage of overpaying for the cash flow now, because it's that cash flow that you sweep is going to compound much faster. So I think we're all in agreement here, and it's actually quite refreshing to have these conversations because, like I said at the beginning of this call, there's not many people in the real estate space to talk with about this. And so I hope, Leon, that you'll want to come back, and you have an open invitation to always join us again on the show.
No, I'd be happy to.
Awesome. Final thoughts, Chris? We'll wrap it about 60 seconds.
Yeah, final thoughts. I think when we ask the question, what does it mean to be a competitive and successful, a profitable real estate investor, into the 2030s? I think we answered it here, today. You're going to be an expert at real estate. You're going to be an expert in Bitcoin. You're going to be an expert in digital credit. You're going to have to be an expert in AI and energy, right? You're not going to be this single discipline operator any longer. That train has left the station. So the most successful real estate folks in the next decade plus, they're going to be multidisciplinary, and they're going to be able to execute on these 4 or 5 categories that we laid out here at a very, very high level across a portfolio. Leon, we're going to put the link to your pre-order in the show notes. But do you have anything you want to maybe close out with here?
No, thank you for having me on, guys. I'll be happy to be back on. I think you summed it up pretty well. I appreciate you making this happen, inviting me, and pushing the Bitcoin and real estate story, so to say.
Awesome. Yeah. Thank you for joining us, Leon. That's it for today's episode. If this conversation was useful, share it with a partner, client, or somebody making real decisions in the market. New episodes of the Real Estate Standard drop weekly. Until next time, stay disciplined, think long-term, and stack sats. This is the Real Estate Standard. If you enjoyed today's conversation and you own commercial real estate, we'd encourage you to think about how these broader shifts might impact your own property over the next decade. Many owners are starting to reconsider how they structure their balance sheets, manage capital, and position their assets for the future. If you'd like to explore how some of these ideas might apply to your own situation, you're welcome to reach out. We work with property owners and investors to think through strategy, structure, and long-term positioning in a rapidly changing market. You can find our contact information in the show notes. And as always, thanks for listening.